or the Greek drama is the flavor of this season. We have Bruno Vestrate, the partner in Lakefield Partners, on the line from Zurich. Bruno, the markets in the Eurozone and the peripheral markets have not capitulated to the news that came in yesterday. So are you seeing a further more downside, or how will that play out?
Well, good morning. I think clearly the markets did fear a bit of contagion towards the rest of the European southern countries. That up till now did not really happen. Now, the good reason for that could be that Germany is basically the country most affected by this chosen default by the Greeks, and that is clearly keeping the spreads on this periphery and Germany down. So I think that relaxes the markets a bit. I think the big impact, of course, it's still very open and very negotiable, but the reality is that there will be a write-off of Greek debt, mainly in the big countries such as France and Germany. And it remains to be seen which economic impact this is going to have in the medium to long term, and that's what the markets are going to look at in the long run. So it could be a decline which is slow but certain, a bit against the odds and a bit against the expectations of most analysts, saying that they would overweight European equities.
But Bruno, what's the market pricing in at current levels? The fall today has only been to the extent of 1.5% to 2% on the key indices. Peripheral markets may have had a dip of just maybe at best 2.5% for the Italian index. So is the market currently pricing in that a deal will be signed between Greece as well as its creditors, or is there a possibility of a Grexit which is being now spoken about in real terms for the market?
Well, I think at this stage the market does really price in the worst case scenario, which is a Grexit, and they don't seem to care too much about it. Of course, the Greeks are convinced that they will be able to stay within the Eurozone, but I think politicians have gone so far that they really do not want them in anymore, and markets do not seem to care too much about it anymore either. There's one mechanism which is really helping the economy a lot, which is the euro. I mean, the euro seems to be a stabilizing factor and is stimulating every negative element to a certain extent. So I think markets do really price in a Grexit scenario. That's the most obvious way at this stage. What they do not seem to price in fully yet is the write-off in the industrialized countries in Europe. And I think that will cause a longer-term problem.
All right, Bruno, the ECB is meeting today, so what could the possible scenarios be, or what could the possible outcomes of those meetings be? And what do you think would the ramifications of that meeting be, or the outcomes of that meeting be to the markets?
Well, interestingly enough, the ECB, before the politicians, is meeting and really has the fate of the Greek banks in their hands. If they push the button that they would not give any emergency credits anymore, I mean, that would be the end of the Greek banking system. At the same time, when they do that, and that is a bit of a conflict of interest, they would push their own self-destruction button. Because one should not forget that the capitalization of the ECB is only 7 billion, and they have around 17 billion estimated Greek bonds on their balance sheet. If they destroy the banking system in Greece, they are basically virtually bankrupt themselves. So that is a political decision which is a very hard one to take. But I think in the end, with capital controls and bail-ins, that is most likely the path which the ECB is going to choose. Clearly, they say that it's politically objective, but I don't see that there is a neutrality at this stage. I'm sure that Ms. Merkel has already called Mr. Draghi so far to see what decision he should take at this stage, running ahead of the meeting with the Euro ministers tomorrow in Brussels.
Bruno, we'll leave it at that. Thanks so much for joining in.